Hey there, you have probably used the digital payments every day. Tap to pay, scan a QR code, mobile banking, or even cryptocurrency. PayPal, Apple Pay, Venmo, your bank app, it's fast, easy, and super convenient. Digital payments have become the global trend, and now the central banks and governments want to join the game by launching their own version, something called CBDC or Central Bank Digital Currency. But when they announce it, everyone hates it. Wait, why isn't it just another trendy form of digital money? It sounds familiar, but it works very differently. What if your money could be programmed where it could expire after a month? Or what if it refused to let you buy certain things, or it suddenly froze and you couldn't do anything about it? Sounds like conspiracy? Not really. These ideas are actually written in official documents and policy proposals. Now we start. CBDC stands for Central Bank Digital Currency. It's basically digital cash issued directly by your country's central bank, like the Federal Reserve in the US or the European Central Bank in Europe. Here's the key difference. When you use Venmo or your bank app, you're moving money between private companies. With CBDC, the government controls the entire system. They issue the digital money, they track every transaction, and they decide the rules. Think of it this way. Regular digital payments are like using different stores in a mall. CBDC is like the government owning the entire mall and watching everything you buy. There are two types: wholesale CBDC for banks to trade with each other, and retail CBDC for regular people like you and me. The retail version is what everyone's worried about. Instead of having cash in your physical wallet, you'd have digital tokens in a government-controlled digital wallet. Every transaction would go through the central bank system. Unlike cryptocurrency, which aims to be decentralized, CBDC is completely centralized. The government has full control over the money supply, transaction verification, and user access. They can create it, destroy it, or freeze it whenever they want. Central banks claim CBDC will make payments faster, cheaper, and more inclusive. They say it'll help people without bank accounts access digital money and reduce transaction costs. They also want better control over monetary policy. Right now, when the Fed changes interest rates, it takes time to filter through the banking system. With CBDC, they could adjust rates instantly, or even implement negative interest rates more easily. Another stated goal is fighting illegal activities. Since every CBDC transaction would be recorded, governments could track money laundering, tax evasion, and other crimes more effectively than with physical cash. Central banks also worry about losing control as cryptocurrencies and private digital currencies grow. Facebook's failed Libra project scared them. They realized big tech companies could potentially replace government money entirely. During the COVID pandemic, governments struggled to distribute stimulus payments quickly. CBDC would let them send money directly to citizens instantly without going through banks or mailing checks. They also claim it would reduce the costs of printing, storing, and transporting physical cash. No more armored trucks or ATM maintenance. Everything happens digitally. The scary part is the level of control CBDC gives governments over your money. They could, program expiration dates into your money, spend it within 30 days, or it disappears. China already tested this during COVID stimulus payments. They could restrict what you buy. Want to purchase too much gas? Sorry, you've hit your carbon limit. Buying alcohol on Sunday? Blocked. The programmable nature of CBDC means your money could refuse certain transactions based on government rules. Privacy becomes impossible. Every purchase, every transaction, every financial move gets recorded in a government database. They'd know where you shop, what you buy, who you pay, and when you spend. Cash transactions that are currently private would become fully transparent to authorities. CBDC could enable social credit systems like China's. Criticize the government online, your money gets restricted. Miss a court date, your spending gets limited. The financial system becomes a tool for social control. During emergencies or protests, governments could freeze accounts instantly without going through banks or courts. Your money could be turned off like a light switch if you're deemed problematic. Negative interest rates become easy to implement. They could literally make your savings shrink over time to force you to spend. Your digital wallet balance could decrease automatically if they want to stimulate the economy. China is leading the charge with their digital yuan, already being tested in major cities. They've processed billions in transactions and are expanding the program nationwide. Russia, Iran, and other authoritarian countries are following quickly behind. The European Central Bank is developing a digital euro, with pilot programs starting soon. They claim it'll respect privacy, but the technical infrastructure allows for total surveillance if they choose to activate it. The US Federal Reserve is researching a digital dollar, though they're moving more cautiously due to privacy concerns and political resistance. Several Federal Reserve banks have published papers outlining potential designs. Major consulting firms like McKinsey, Deloitte, and Accenture are helping central banks design these systems. Tech companies are building the infrastructure, though many are being secretive about their involvement. The Bank for International Settlements, which coordinates between central banks worldwide, is pushing CBDC adoption globally. They publish research and best practices to help countries implement these systems faster. Over 100 countries are now exploring CBDC programs. Some are just researching, others are running pilot programs, and a few like China are moving toward full implementation. Privacy advocates are raising alarms about surveillance and government overreach. Organizations like the Electronic Frontier Foundation warn that CBDC could end financial privacy permanently. Some US politicians are introducing bills to ban or limit CBDC. They argue it violates constitutional rights and gives the government too much power over citizens' financial lives. Cryptocurrency supporters see CBDC as the opposite of what digital money should be: centralized instead of decentralized, controlled instead of free, surveilled instead of private. Civil liberties groups worry about the social control implications. They point to how authoritarian governments could use CBDC to punish dissidents and control behavior. Banking industry players have mixed reactions. Some see opportunity, others worry about being cut out of the financial system entirely if people deal directly with central banks. Academic economists are debating whether CBDC solves real problems or creates new ones. Some argue the current banking system works fine and doesn't need this level of government intervention. Public opinion polls in many countries show skepticism about CBDC, especially when people understand the surveillance and control implications. The more people learn about it, the less they like it. CBDC isn't just another form of digital payment, it's a fundamental shift in how money works. It gives governments unprecedented control over your financial life, from tracking every transaction to programming restrictions into your money itself. The technology makes things possible that were never possible before: expiring money, restricted spending, instant account freezes, and complete transaction surveillance. Whether you think these are features or bugs depends on how much you trust your government. The stated benefits, faster payments, financial inclusion, better monetary policy, might be real, but they come with costs that many people aren't willing to pay. Giving up financial privacy and accepting government control over their money, this isn't some distant future possibility. CBDC systems are being built and tested right now. China's already rolling theirs out, and other countries are following. The decisions being made today will shape how money works for decades. The question isn't whether CBDC is technically possible, it obviously is. The question is whether we want to live in a world where governments have this level of control over our financial lives. If you care about financial privacy and freedom, now is the time to pay attention and speak up. Once these systems are in place, it'll be much harder to change course. Subscribe if you want to stay informed about CBDC developments and other topics that affect your financial freedom. The future of money is being decided right now, and everyone deserves to understand what's at stake. Hit subscribe and the notification bell, because understanding the future of money helps you protect your financial freedom, and this story is just getting started.